Hey folks, this is Rainer here from tradingwithrainer.com. I would like to rant a little bit because earlier I was actually doing my video and I actually complete my entire Forex video analysis. And when I start to replay it, I noticed one thing. I noticed that the mic wasn't plugged in, so there wasn't any sound at all. So that was like, oh my goodness, how silly could I get? So right now I'm actually redoing this entire video analysis and yep, let's do this. So alright, so welcome to tradingwithrainer.com. For those of you who are the first time coming to see my video analysis on my website, what I do each week is actually that I post up potential swing trading opportunities in the coming week. I basically get my buyers on the weekly charts and go down to the daily and 4 hour time frames to look for entries and exits. Okay, so recently I have some followers asking me, whether I provide any signals because they find that my analysis is useful and they actually like to follow my entries and stop loss and take profit targets. I find that that's not a very good way to learn because my forex analysis basically is actually to first is for educational purposes. Second is also for me to sort of go through the market each week, and by doing a video analysis, I better understand what I'm looking for in the coming week. So for you guys who are actually watching this analysis, it's not a signal provider, but rather it's for you to understand where I'm coming from in the market, where I'm looking at the markets and my own interpretation of the market. So how I would suggest you guys use it is actually, if you have your own interpretation and your own analysis of the market, my analysis is sort of like adding to a confluence to what you're already looking at and not solely taking it as a signal service, because that's not what I intend to do. So if you find that my analysis for a particular pair doesn't make sense to you or there's no logic, then I'll suggest stay out of that trade entirely, because your own analysis doesn't add confluence, doesn't make sense in what I'm saying. So I would suggest follow your own analysis and only use mine as an added confluence. Yeah, that's what I would say. And that's how we actually learn to be a better trader, because no point following just simply my entry and exit because you're actually relying on me to do the trade for you. And what if one day I'm no longer here? You still do not know how to, you still can't make money trading. So I would suggest learn how to trade, because once you learn how to fish, a skill is with you for life. Alright, without further rant, I don't want to rant anymore. Let's look at some charts. So this is the charts of the Euro Swiss franc. Okay, let's do this. So the line was there because earlier I was actually looking at this pair and have not removed it. So this is Euro Swiss franc, and you can see that it has been ranging between 1245 and the 122 level, and you can see it's actually approaching towards the downside because I drew that line earlier, which we can see the lower highs here. So price actually has been rejected this level a couple of times. So another thing, if you notice that the 122 level has held up quite a number of times, 1 time, 2 time, 3 time, 4 time, and right now price is at the 122 level again. So how will I look to trade this pair? For those who have been following me for quite a while, you probably know I'm going to say look for a bullish pin bar or an engulfing pattern. That is right. So that's what I'm actually looking for on this pair. If not, I probably would miss the trade, because if you notice the Euro Swiss franc, ever since it was pegged to the Euro dollar at 1.2, it has been really rangy and choppy if you ask me. So this trade is still possible to find a trade because it is at a good location at 122 level. But however, I will still look for the best price patterns before trading it. If not, I'll just stay out of this trade entirely. So if only a bullish pin bar and engulfing pattern is formed, I'll look to long. If not, I will not have any trades on this pair. So yep, that's for the Euro Swiss franc. Looking at the Euro yen right now, right? Looking at the weekly chart. So what we can see is that price is still in a beautiful uptrend, right? We have uptrend, beautiful. We have lower highs here, 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 and here. So however, if you notice that over the last few months, I haven't been trading much of the yen pair because price was actually consolidating in the uprising wedge. So I can highlight to you down here, this wedge down here, and price was actually very choppy inside, and I did not like the price action at all. So I would rather stay out on this pair over the last few months. You can see the wedge and notice how clean this move is over here, right? The move is so clean, but when it approaches this wedge here, how choppy is it over here? So I did not like the price action inside here at all. Did not like it, thus I did not trade inside. But right now, look what happened over the last few weeks. Price actually broke out the wedge and seems to be heading higher in the coming weeks. So I'll look to long this pair. But how do I go about it? That I'll have to drill down into the forward chart and look for long opportunities. So removing some lines here. This is the forward chart. I'll zoom out. And you can see lower highs here as well. 1 time, 2 time, 3 time, 4th time. So it's an uptrend, can't deny that. And here's how I look to long. So technically, when price is in an uptrend, the lower high should stay intact, because once it's broken, it could actually signal to us that perhaps the uptrend, the strength of the uptrend is perhaps reduced, or it may actually want to range for a moment. So right now, as you can see, all the lower highs are intact still, so I'll be looking for longs. So where will I look for longs? So we can actually have a support here, because we know previous resistance will turn support, and I'll look for price to retrace back lower towards this support level. As long as there's no strong bearish momentum towards the support level, meaning the candles, the body of the candles when you retrace are pretty small and decent, I'll look to long somewhere around this support level and have my stops below this swing low over here. So price level wise, I'm looking to long around the 139.80 level, 139.70 level, and my stops will be somewhere around the 130, or I'm estimating 138.50 level. So around a 40-50 move, 40-50 pip. Is it a 40-50 pip? I think it's more than that. Let me check the wall. So I'm looking to long somewhere around here, 139.70 stops below here. So 137 pip stops. So yeah. So I can't really pinpoint you the exact entry, because I'll be watching how price retraces towards this support level, and that's if the retracement seems very, I would say, mild. Right, like this kind of retracement is so mild. This one is pretty steep as you look at it. So it's pretty mild. It's pretty mild. Yeah, these are the types of retracement I'm looking at. Those mild retracements. Yeah, I'll look to long somewhere around the previous resistance turn support level and have my stops below here. Take profit wise, I suggest you can actually take some off, whereas if price approaches back this swing high over here, and look to run the rest as the trend continues. So yep, this is for the Euro Yen, and the last pair I'll be looking at is the New Zealand Swiss franc. So this is a daily chart of the New Zealand Swiss franc. I'll zoom out a little. You can see that again another Swiss franc pair that's ranging between the 77 level and the 72 level. So it's about in the 500 pip range around here. Alright, so about halfway in this range, we have another support coming in around here, which is around the 73.80 level. Yeah, so I'll say this is the mid-range support. Nonetheless, we still can trade it. So let's look at some price action analysis over the last few months. So basically, what happened was that price came down lower, tested the support. We have a bullish pin bar over here. Then price rallied higher, okay, and formed this bearish pin bar, if you ask me. So not exactly a very bearish pin bar, but nonetheless a pin bar over here, right? A pin bar. Then price retraced lower before bouncing up higher again. So when it hit higher, this is what I call an inside bar pattern. I don't really trade it often, but it's an inside bar, right? Signaling indecision between the bulls and bears at the resistance level, and then price came down lower. Came down lower, formed an inside bar followed by a bullish pin bar, right? And headed higher. As it headed higher towards resistance, what do we have? My favorite bearish pin bar over here, right? Price then hit lower, retrace a little bit more higher, and form another bearish pin bar over here for you guys before heading down lower again. Okay, so right now we're at the support level of the mid-range, and this is where I'll be actually interested to get long. Why am I interested to get long and not wait for the 72 level? Right, reason being is that this level right now, the 732 level seems to be holding up, and it deserves a fair chance of going long, if you ask me. So let's look at the recent price action and let's analyze it. So basically, people who went short somewhere at resistance level here and here, they probably booked half their profits or took profits at this support level right here. So price came down lower, probably took some profits or took all their profits over here. Then for those people who are interested to get long, they will probably get long somewhere here, right? Because what they'll do is they look to get long when price from this bullish candle, right, and have their stops below here. So what happened is that after this bullish candle, price came down lower and probably took them out of their trade. They probably got stopped out because their stops were all clustered over here, right? So price then formed another bullish pin bar over here. Sorry, this is quite messy. Yeah, price is another bullish pin bar over here. So some people got long after this bullish pin bar. So price hit up higher, and if you ask me, right, after this bullish pin bar, I actually expect price to make higher move. But look what happened. It retraced down lower, stopping out those people who went long on this bullish pin bar. So this candle here, stopped out those traders who went long on this bullish pin bar, because technically their stops were actually below this swing low over here. So here's my interpretation. Twice they went long and twice they got stopped out. However, if price is so bearish, right, meaning this bearish move down, retrace higher, and now attempted to run downside, if it's so bearish, right, this stop should not only be taken out, but price will actually close below here, below this swing low over here. But no, it did not happen. What happened was that it triggered their stops and closed higher instead. Right? As you close higher, as you can see, close here and form a nice bullish pin bar. So my interpretation is that price is not as bearish as it seems. If it's that bearish, it probably closed below here and tried to attempt a short at the 72 level. But no, it did not. Instead, it formed a bullish pin bar, which tells me that this level, 732 level, is where the bulls are interested to get long. So I'm actually looking to get long on this pair right now after those traders who went long earlier who got stopped out twice. So now it's my turn, my chance that I'll look to get long. So what I'll do next week is that when market prices open, I'll look to long anywhere below the high of the pin bar, get my stops below this low of the pin bar, and I'll look to set the break even when price reaches this swing high over here, and finally take profits at the 77 level over here. Let me repeat if that's too fast. Basically, price form a bullish pin bar at the 732 level. I'll look to long anywhere below the high of the pin bar, and my stops will be below here. As price rally up higher towards this swing high over here, I'll set my trade to break even. So I'm a risk-free trade. And should price hit up even higher towards the 77 level, here's where I'll take my profits. So yep, you're easily looking at a 1 to, if you ask me, 1 to 5 risk reward trade, easily. Of course, depending on where you enter and where is your stops. But I've just mentioned where I'll enter and where my stops, and I'm looking at about 1 to 5 risk reward trade for this. So yep, that's all I have for you this week. If you guys enjoy what I'm doing, you can actually go to my website at tradingwithrainer.com. I do apologize that I've not been updating my articles and chart talk because due to my hectic work schedule. But do not worry, those will actually come back in due time where my schedule start to ease off. In the meantime, if you're not connected with me, you can actually do so. Subscribe to me on YouTube and join me on my Facebook discussion group over here. Any questions, comments, you feel free to contact me as well. So thank you guys, good luck and good trading, and we'll talk soon. Bye bye.